From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 17th, 2016. In today's video, we're going to be taking a look at the NZDUSD, the New Zealand dollar, versus the US dollar. Starting here on the daily time frame, this is probably the most important time frame to point out on this currency pair. We are challenging now into a significant resistance level here for this currency pair. If you look here on the daily time frame, I have this black box on the chart representing somewhat of a range that this currency pair has been bouncing around in for quite a while. We're going all the way back to September and October of 2015. We have been continually finding resistance towards the top of the box and support towards the bottom of the box. Most importantly today is that we're up here towards the top of that range and into significant resistance. You can see right here where the red circle is on the left hand side, we found resistance and significant reversal to go down. Where the blue box is in the middle, we found resistance and significant reversal to go down. Well, here we are once again into that same area. The green circle on the far right hand side shows us that we're in that same area of resistance. Well, logically speaking, it tells us that as long as we're within or underneath this blue shaded area, the top of the black box in this area where we see this historical resistance, we wouldn't want to go long. We don't want to buy it because we're running into a significant barrier of resistance here for the New Zealand dollar, and it has been for several months. The only reason to go long and buy this pair is, of course, it has to go down to support or break through this significant barrier of resistance. Let's begin to zoom it in a little bit here on the daily time frame. Again, now you can get a real sense of what's happened the past couple of times. The red circle on the left, resistance and reversal. Blue box in the middle, resistance and reversal. And here we are again into that blue shaded area, top of the black box where the green circle is. We saw the last time where the market touched here into the blue shaded area around the 6,800 level and moved all the way down about 200 pips back down here towards the orange zone. Of course, that was spurred on by a cut of interest rates in New Zealand, but definitely something to take note of is that it found resistance at the blue shaded area. Again, here, the third instance of challenging into that resistance zone. Again, I believe the only reason to really look for taking longs or buying this currency pair at this current moment would be a break of that. A significant push through there, a significant breakout, open and close significantly above 68.35.40 would give you expectation that it's going to continue to pressure higher. Until then, as long as it's within there, it doesn't really exude confidence in looking for an opportunity to go long underneath that resistance level. Remember, as traders, we are not going to find the no risk scenario, but what we can find are lower risk scenarios. So right now, if you think about potentially going long, the market's been going up since yesterday's Fed. Here for the New Zealand dollar, it's been going up since yesterday's Fed. So if you're considering going long, right now is not the time to do it. It doesn't exude confidence in going long. It's not low risk and high potential reward because we're running into this barrier, this price ceiling of resistance here at the blue shaded area underneath the 68.35 or so level. So if it's high risk and not confident to go long, then there's potential that we could be looking for, once again, clues and instances of resistance and reversal here from this level. I've gone ahead and jumped in at the 68.20 level. I felt like the risk reward was going to be balanced in my favor enough, so I went ahead and jumped in right around 68.20. You can see the trade going at the very bottom of the chart, and I'm looking for a reversal. As it starts to go back down, if it starts to go back down towards the pink shaded area, of course, I'll be looking to protect profit into that pink zone. If it can get back underneath there, I think there's a good shot getting back underneath that pink shaded area and underneath the 67.40 or so level that we continue to tumble back down towards the orange zone as the next barrier of significant support that we can see back here on the left hand side. So that gives me some confidence to stick with the trade, sell it into the low 6800s, target first off coming back down into the 67.40, 50, 60 level, the pink zone. Beyond that, we go back down into the 6600 level, down into the orange zone. And of course, beyond that, we could even see further push lower. The risk, and there's risk in again in every trade that we take, is that it breaks above the blue zone. So you need to have a plan in place to curtail that risk if the market doesn't do what we expect it to do. If we continue to see that push against the US dollar, then we would want to get out. Specifically, I think if it breaks above the 6,900 level, that's the green shaded area you see at the very top of the chart. If it gets above 6,900, I think all bets are off, and we're likely looking for the continuation higher, because it hasn't done that even where the red circle and the blue box are. It hasn't broken above the 6,900 level this entire time. So since October and November of last year. So again, I think that what we're looking for is resistance into this level, and more likely watching for clues and evidence of resistance and reversal and selling opportunities for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.